90 or 95% of his wealth is not in rupees, it's in dollars. And at the moment, as distribution partners, you don't have a single product which you can sell to them in dollars. Through the Gift City, you will have the opportunity to sell products to them in dollars to foreign nationals, NRIs, and foreign companies, right? Who cannot invest in an inbound fund, resident Indian like all of us, right? You can't convert money from INR to dollar and back to India. Currently, in this fund, we are not taking US and Canada, but we are launching a next fund next month where we'll hopefully start accepting US, Canada as well. And grey list countries are also allowed. Someone had said grey list. So we accept money from grey list countries. So evening everyone, and thank you for giving us this opportunity. So I heard Nilesh Shah just before me, and he was talking about a blue ocean strategy where all of you can create a new business line for you. So I have a blue ocean strategy for you. So the strategy is that you can sit in your own city and expand to sell your products to investors based anywhere in the world. So let me start with Gift City. How many of you have gone to Gift City? A lot of you. So technically all of you know that Gift City is located between Ahmedabad and Gandhinagar. But interestingly, as per FEMA, Gift City is not considered a part of India, right? So it is considered a jurisdiction outside India. But when it comes to taxation, Gift is considered a part of India. So Gift is a very interesting place. So we talked about insurance, we talked about mutual funds. In India, there are how many regulators? 4 regulators. Can you name them? SEBI, IRDA, PFRDA, RBI, right? But in the Gift City, there is only one regulator. The regulator is IFSCA, and the regulator has powers equal to RBI plus SEBI plus IRDA plus PFRDA. So when it's got anything from pension to investments to insurance to banking, there's only one regulator, which is IFSCA. And all of you know mutual fund KYC doesn't work for insurance, insurance KYC doesn't work for banks. Thankfully, one regulator means the entire ecosystem can work more seamless, hopefully in the future. Second, interestingly, I said Gift City, as per FEMA, is a jurisdiction not in India. Hence, can you tell me few currencies which are not allowed to be traded in Gift City? Okay, so not grey list, black list, but some of the people rightly said Indian rupee is not allowed to be traded in the Gift City. So in fact, when we set up our branch, I was trying to send laptops to our branch, and we had to fill up export and import requisition form, right? So for you, what is the relevance is that when you sell a Gift City product, it is considered export of service. And because it is considered export of service, there is no GST applicable. Okay, so 18% of your income goes up directly. So one advantage I already gave you is your income will go up by 18%. Third, and Dimple told me that cover tax, and I said 15 minutes is never enough to cover tax. But can you tell me jurisdictions from where India gets money? Where do foreign investors come from to invest into India? Mauritius, Singapore, Dubai, Luxembourg. You are absolutely right. Most of these are most known jurisdiction where money comes from. Taxation of gift is at par or better than all of these jurisdictions that we mentioned. So the idea was to attract money from all these countries rather than that fund being managed from Luxembourg, Dubai, Cayman Islands, all these countries. Why shouldn't that money being managed from India? And taxation of gift will be at par or will be better, and we'll cover how. Maybe I'll cover that at the last so that all of you remain awake till the last. So these are all the advantages of Gift City. Mirae Asset has set up our office in Gift City in 2023. We have a FME retail license in the Gift. which means we can launch retail mutual funds in dollars also in the GIFT. We've started with a CAT 3 AIF and hope to launch a retail mutual fund in the GIFT City soon. We are already managing a $300 million mid-cap fund from the GIFT City, and we've already launched an inbound fund in the GIFT City, which allows non-resident and foreign nationals to invest into Indian markets and distributors like you to sell this product to your investors who are based anywhere outside. This is just a photo of few of the events we did with IFSCA, the regulator for the GIFT City. And this is a vibrant Gujarat, and somewhere hidden amongst the global leader is our CEO, Mr. Swaroop, who represented us in the GIFT City. Now let me a little bit cover about our product, and then I'll sort of cover on various aspects about GIFT City and how it can help investing. So when an NRI wants to invest into Indian markets, there are essentially two questions in his mind. Can you tell me which two questions? No, not challenges. So one is how much to invest in which market cap and how much to invest in theme. So we thought that why don't we give an investor's complete answer to both these questions, market cap and theme. So we created a fund of fund structure where 80 to 100% of the allocation is market cap based and up to 20% is based on theme. And of course, market cap means large, mid, small. Themes can be any theme we like. And we've mentioned minimum and a maximum. It's a feeder fund which feeds into not one fund, multiple funds. And the reason multiple fund is because we didn't want investors to be stuck only to mid cap or to small cap and large cap is doing well, or to stuck to large cap if mid and small cap is doing better. And we also wanted flexibility of having one or two sectors which can add alpha. And we've chosen multiple factors. One is momentum, valuation, to decide how much the allocation should be. And it is sort of done quite dynamically. If you see this chart, the allocation sort of moves between large, mid, small and themes very, very dynamically, actually rebalanced on a daily basis. So not rebalanced once a month, once in 3 months or once in 6 months, but rebalanced daily. And this rebalancing daily is helping us create a sort of a good track record. So when we back tested this, and the orange line is our funds and the oldest NAV of our funds, and if the NAV is not that long, returns of the index. In 17 years, $1,000 has become $16,000, 16x in 17 years. While, the Nifty 500 would have become from 1,000 to about 8,000, 8x. So you can see clearly a huge alpha over this 17 years, and this is actual NAVs of Mirae asset funds. And if you see 1 year, 3 year, 5 year, 10 year, 15 year data, you can see the model has sort of given close to 20% returns in INR terms and delivered about 5-6% alpha over this period on a CAGR basis. Now when I break this alpha comes on two sides. One is the funds. So 2/3 of the returns is coming by the fund giving alpha, and 1/3 of the alpha is coming by the change in mix between large, mid, small and themes. So the dynamic way of changing allocation is helping generate higher alpha over and above the returns of the fund. So I'm sorry skipping a lot of things so that I don't miss out on the time, which is here in front of me. So I wanted to ask for all your NRI investors, what are the challenges you have when they invest in Indian markets? KYC, absolutely. Taxation. Anything else? Repatriation, okay. Restrictions, okay. Rupee depreciation. So I got 4 answers or 5 questions, and if I answer all 4, 5, hopefully you will invest in Mirae fund in the GIFT City. And I wrote these questions points beforehand. So first is KYC and documentation. Third is taxation and ease of tax filing. Third is remittance and repatriation. And fourth is currency. And we'll cover all 4 of them in detail. First, someone said, who can invest? and there is sort of restrictions on who can and who cannot invest. So first, who can invest? Any NRI, any foreign national, whether he is an individual or a foreign company, can invest. So even if you have a company outside India, where some of the owners can be Indian and JV partners could be outside India, can invest. Interestingly, our product is live for the last 4 months. Our product has a daily NAV for the last 4 months. You can go on our website and check it. And it's an open-ended fund. You can enter and exit the day you want. More than 20% of the money has come from foreign nationals, right? So if all of you thought that your opportunity is only NRI, I'm telling you, you'll be surprised. Because if you can tell your NRI client to refer even one foreign national, it will help you increase your size of opportunity. Second is, currently you're only servicing your NRI clients for INR products. Anyone who's living outside India for 10 years or 5 years or 20 years, 90 or 95% of his wealth is not in rupees, it's in dollars. And at the moment, as distribution partners, you don't have a single product which you can sell to them in dollars. Through the Gift City, you will have the opportunity to sell products to them in dollars, to foreign nationals, NRIs and foreign companies, right? Who cannot invest in an inbound fund, resident Indian like all of us, right? You can't convert money from INR to dollar and back to India. Currently in this fund, we are not taking US and Canada, but we are launching a next fund next month where we'll hopefully start accepting US, Canada as well. And grey list countries are also allowed. Someone had said grey list. So we accept money from grey list countries here. So actually only 3 countries are not allowed. 4 countries actually: Iran, North Korea, US and Canada. Except that you're effectively taking money from investors everywhere. And now someone had said KYC, ma'am said KYC. So for anyone to do investments, you don't need an Aadhaar card, no PAN, no PAN Aadhaar linking. You need one ID proof and one address proof. And your ID proof can be your passport. Any NRI will have a passport. So that works as an ID proof. If your passport also has your address, then it is enough as an address proof. So only by your passport, one document, you can make your investments. For our product, we've created a completely digital onboarding journey. So completely all the documentation can be done online rather than any paperwork. So only one proof of ID and address and you are good to start investing, and completely digital. And because as distributors you are here, your clients can be any part of the world. They need not be in India for investing, right? They can be seated in their home country while investing. But because they are based outside India, you have to do OVD, which is original verified. It can be done by a bank official, a chartered accountant or a lawyer who can just confirm the transaction. Second is, the money can come from any bank in the world. It can come from Abu Dhabi Commercial Bank, it can come from Bank of America, Bank of Singapore, Deutsche Bank, Germany. So any bank in the world you can transfer your money from. You have to give your bank statement from which you are transferring your money, right? You can transfer money from your NRE account or your FCNR account, but not your NRO funds. Because your money is coming in dollars, it will go back in dollars. There is no question on repatriation and remittance of funds. No questions asked on repatriation and remittance of funds. So first we covered KYC. KYC is fairly simple. Repatriation, no questions asked. You can repatriate as quickly as possible without any documentation. Third is taxation. Now, beauty of this product is that, all of you know when mutual funds buy and sell shares, do they pay tax? No, because mutual funds are a pass-through vehicle, so they don't pay a tax, right? Now, in case of a Cat 3 AIF, the taxation is at the investor level or the fund level? Fund level, not at the investor level. Since our fund is a Cat 3 AIF, taxation is at the fund level and not the investor level. There's a beautiful clause which says, when your instrument is a non-equity instrument, no capital gain arises in case of transfer of units, which include mutual fund units. Okay, so our fund has underlying mutual fund as units, and if you buy and sell, if our CAT 3 AIF buys and sells mutual fund units, there is no tax incident. So all products in the GIFT City are not tax free, right? If their underlying is shares, then they have to pay tax. If your underlying is mutual funds and a feeder through vehicle, you can sort of avoid tax. Maybe one more minute because, technical issue of the mic, we started little late. So there is no tax incident there. And currency risk, well, you transfer your money to us in dollars, your money goes back to you in dollars. So hence, you don't take a currency conversion risk. TV rate might be 84, 50. When you buy and sell, your rate might be 86 or 82. So you take a currency conversion risk. There is no currency conversion risk here. Of course, you will take a view on the rupee when you invest into India, and that's true even if you invest anywhere. So first, ease of documentation, completely digital onboarding, no tax, in one product, across market caps and themes you can invest. You can use your foreign bank account to invest. You can invest in dollars, not in INR. This gives flexibility of investors to ride the India wave. And we know that the India will sort of grow 9x in the next 10-20 years. India is a beautiful destination. So just don't look at only NRI clients. My submission is look at foreign nationals, look at foreign companies along with NRIs. And if you look at NRIs who are based outside India and start getting money in dollars, you can grow your business multiple fold times. So with that, I'll end my session today. Thank you.